After almost doubling my account trading options, I lost it all in about 2 days. How did that happen? Well, it was a process of small mistakes compounding over time that eventually led to me blowing up the account. So we have to start at the end of the last video. The only position that I had open at the end of it was a straddle on the Nasdaq, and with the market going up by quite a lot, I sold it for a small profit of around 34 euros. Now before we begin, I just want to explain some of the terms I'll be using. I mostly trade based on the candles in relation to the 180 simple moving average, or in short SMA, which is this red line, and the 15 exponential moving average, or in short EMA, which is this blue line. And sometimes I'll also be using the VWAP, which is this purple line. I had a great start on Monday, January 23rd, when 5 minutes before the market closed, I decided to buy a put option on the Nasdaq 100 futures, because when I examined the chart, I saw that the 180 daily simple moving average firstly acted as a strong support, and once the Nasdaq broke through it in the beginning of 2022, it started acting as a strong resistance, and the chart was once again close to this possible resistance. Overall, I was bullish and believed the market could continue going up, but I was sure we would see some resistance, especially because the Nasdaq was also close to the weekly 180 SMA. So because the options I was buying were expiring in a week, I bought the smallest position possible, and a day later I sold it for an extremely small profit of 5.19 euros. Then on Thursday, January 26, once the Nasdaq fell to its daily lows, I bought 21,000 euros worth of Nasdaq futures, and I was able to do that with just 1,000 euros because of a 1:20 leverage. Once I started recording, I was already up by more than 50 euros and was thinking about selling before we hit the VWAP. Unfortunately, the market started dropping before it even got close to it, and I wanted to sell once it dropped to the EMA, but my broker was lagging and I sold it a bit lower for a small profit of around 17 euros. After a couple of hours, the market was steadily getting close to the VWAP and the SMA, and it was consistently getting rejected by the VWAP, so I opened a short position on the Nasdaq and set a stop loss above the SMA. When the Nasdaq got extremely close to the VWAP, I opened another short half the size of the previous position. Well, I was wrong and the market rose above the SMA, and my first short got closed due to a stop loss for a loss of 56 euros. At this point I should have stopped as I was getting quite emotional, but because I still strongly believed that the market was going to drop back down, I immediately opened another short in what I later realized was just revenge trading, and I think you know what happened. The market continued going up and both of my shorts got closed due to a stop loss. On Monday, February 6th, in the pre-market, the Nasdaq was already down, and once it looked like it stopped falling, I bought around 22,000 euros worth of Nasdaq futures. Once the market opened, it went straight up, and once it got to the 185 minutes SMA, I was thinking about selling, but greed took over and I decided to hold. The market was slowly going up and down for quite some time. At one point it even looked like it was going to drop below the EMA, then it went up and then it dropped like a rock. And once it actually dropped below the EMA, I sold my contracts for a nice profit of around 60 euros. And while I was trading, I also bought a small call option, which was at this point down by around 20 euros. After the market fell a bit lower, I bought more of the same option, and my plan was to buy more calls if the market drops by 1% or more. And well, the next day in the pre-market I bought even more of the same call option, and I'm not sure if the market dropped by 1%, so just after one day I was already not following my plan. And my next plan was to slowly buy more calls as the market drops closer to the daily 180 SMA. Remember this plan for later because it had a major flaw that eventually cost me my whole account. On Wednesday in the pre-market I was even up around 200 euros because of those call options. Unfortunately I didn't sell, and after the market opened it completely tanked. On this day Google revealed their chatbot AI and it was a failure, so the stock dropped by more than 7%, and I thought that was an overreaction, which is why I bought quite a large position of Google call options with a striking price at $103. And this is when I made my second mistake. I assumed that these options expire on the same day as the Nasdaq options, and once I looked at the details of my trade, I noticed that they have an expiration date on February 15th, which means I just bought 1 week till expiry options, and to hit the striking price Google would have to rise by 2.7%. The next day Alphabet dropped by more than 5%, and in my genius I bought another call option on this stock. In perfect hindsight I should have immediately sold my first Google call option, because the whole idea behind this trade was that the drop was an overreaction. So why would I buy more calls the next day when the stock dropped even more? I think I was revenge trading and couldn't admit to myself that I made a huge mistake. During the next next couple of days I was trading a bit, which lost me 33.75 €, and according to my plan I bought 3 more call options on the Nasdaq futures, and at that point I would even be in profit if I hadn't bought Google calls, and the only way those calls would get in profit was if the CPI came out better than expected and would make Alphabet stock jump up by a lot. After the CPI report came out, the market initially dropped, went up, dropped again, went up again, and then slowly bled out in the pre-market of the next day. When the market was near its daily lows on the CPI report day, I bought one more Nasdaq call option, and on the 15th in the pre-market I bought another one. And at the end of the day my Google call options got closed for a loss of almost €600. On Thursday, February the 16th, the PPI report got released and the market dropped almost straight down, and at those lows right before the market opened I bought quite a large call option position. I bought it because I thought this was an overreaction, and usually when the market is already down in the pre-market it tends to bounce back up once the market actually opens. Luckily this time I was right and I thought I was going to make a lot of money. Well, I was terribly wrong. The next day I woke up and checked my account only to find its balance set to €40,000, which happens in a demo account when you pretty much lost everything. So if I was trading with real money I would be penniless. And the first thing I wanted to know was, how did that happen? The answer is in brutal honesty quite simple. An hour before the market closed on Thursday, it for some reason started falling extremely fast, and at market close I was down by around €900. The next day in the pre-market the Nasdaq fell even lower, and it was down by around 0.7%. So when the options market opened, all of my positions became worth even less, consequently triggering margin calls and making my account go to zero. But aside from what happened in the market, let's focus on what I did, because this loss is my fault, and if I want to improve I need to understand what I did wrong. It all started with my plan for buying these Nasdaq call options. Firstly, I still think it was a good plan to buy more calls as the market drops lower, but I didn't take into account the fact that the options I was buying were just 2 weeks till expiry, and that was definitely not enough time for the market to drop down and then go back up by such a large amount. Secondly, I bought way too many calls way too early. Instead, I should have been slowly buying more calls as the market dropped lower. And finally, if I was over leveraged, I should have at least set stop losses to prevent my account going to zero just because of an unexpected drop. And another mistake was me buying Alphabet call options. Firstly, I shouldn't have bought a large call position on a stock I haven't traded before, and secondly, I should have checked the expiration dates before buying the options. I'm honestly just disappointed in myself. I was trading consistently, made nice profits, didn't hold positions for long periods of time, and I like to believe I was trading based on my own rules. But at the end, I lost everything in just 2 days. I won't give up and will start from scratch. And if you would like me to continue uploading my progress, let me know by smashing that like button. And if you would like to support my channel, consider subscribing. It's free and you'll help me out a lot in reaching my goal of 600 subscribers. And thanks for watching.